and welcome to Morning Trade with Money Control. I am Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our live feed, and in our last segment we'll have your questions addressed by our expert. But before bringing the guests on board, let's see what the global setup looks like. Wall Street, well, it took a plunge amid volatile trade yesterday after US Fed Reserve hiked rates by another 75 basis points. Fed Chair Jerome Powell pledges more hikes to fight inflation. Asian markets, meanwhile, also are trading lower, and SGX Nifty is pointing to a decline of over 150 points. Europe also closed higher as investors braced for another aggressive interest rate move from the US Fed. Stoxx 600 was down 0.9%, having recouped opening losses. Among individual stocks, we put the spotlight on Ashoka, Buildcon, PB Fintech and Dodla Dairy. All right, before bringing our technical analysts on the board, we have to address the big story of the day. US Fed hikes rate by 75 basis points, and we're joined by Ben Emmons of Medley Global Advisors to give us his perspective on the same. Hi Ben, thank you so much for taking time out. 75 bips largely factored in. What really upset the markets then?
Hi, Karunya. Yeah, I think what happened was that people didn't expect the Fed to show a projection of a funds rate more than over 4% for the end of this year. So you hiked indeed by 75 as expected, but then you're going to hike another 125 basis points or more before the end of the year. And I think that wasn't factored in. In fact, most people thought that that would be more into next year. So the Fed, I think, is really keen on getting inflation so much under control. It wants to pull forward this higher rate that they consider to be restrictive enough to get inflation under control. So it was a surprise to markets, and that's why you saw the knee-jerk reaction equities that ultimately ended up in a sell-off.
But Ben, you know what? Perhaps the market wanted to really hear was how restrictive is restrictive going to be. Now, Jerome Powell also said that a large group is in favor of a total 100 bips of hike rate by year end. So is that something now they will be working with?
Yeah, they do. And, within the FOMC, there's always division, of course, of, how far they can go and how many hikes they have to do. And that he made a note of that is something that I think treasuries, in particular, long maturity treasuries, took note of, because if it does turn out that the data gets a bit in their direction, like softer labor data, softer inflation data, they may not have to do the full 125 basis points that's now projected, at least until year end. So it is still that data dependent element. But I have to say, though, this was a very hawkish press conference, a hawkish projection. I think that the Fed is keen on getting inflation such under control that it can avoid a recession. That's why it projects a soft landing still next year. So that 100 basis points of that group of people is also about that. They try to avoid to overdo it, to over tighten, therefore, and then end up with a soft landing instead of a recession. Therefore, the 100 basis points.
It sounds extremely bullish yet hawkish at the same time as far as the commentary is concerned from Jerome Powell. Talk to us about what is the probability of a soft landing according to you. Do you think they're on course?
Well, hopefully they are, Karunya. I think it's a really difficult task. Someone likened it like, you were landing a 52 bomber on a picnic blanket. I can imagine that, like if you have that large of a plane on a small blanket, it's really difficult, right? So I think what they are really want to set on is that inflation does start to decline more consistently every month, because that will be an improvement of real income in the United States. And that's still uncertain. They don't know if they actually can succeed with that strategy. So the soft landing is in that sense in doubt, even though that they have to project that there's a soft landing, because they don't want to bring confidence down. So I think it's a low probability, maybe something like 20% for a soft landing.
Okay. There were and still are a slew of central bank meetings lined up this week. Next week, of course, the Reserve Bank of India, MPC, will also be meeting to decide the future course of action as far as rate hike regime is concerned. What are you expecting, especially for emerging markets? Will they now follow suit? What's happening in the US Fed will be mirrored with a short lag?
Well, what was interesting today, Cunha, was right after the Fed, the Bank of Brazil met, and they left finally rates unchanged. And if you look at that, what happened over the past year, the Bank of Brazil hiked rates by 1,175 basis points to finally get to a point that they can slow down their tightening or stop it for the time being. We think that emerging markets are in that stage, that most of the central banks have moved ahead of the Fed so much they don't have to do a whole lot more from here, because commodity prices have changed, energy prices for now have changed, and economies everywhere are slowing down, in part because of China slowing down. So I think what we can expect in India and in Asia, we will still see some rate hikes, but nothing what you're seeing from the Fed today by having to do more even. In emerging markets is probably going to be a tightening cycle that starts to slow down, if not pause at this stage, and see what the real impact on the inflation is, which does look to be moderating a lot of emerging markets.
But if we look at India specifically, there has been a lot of conversation about how India has managed to decouple with what's happening in the larger economies of the world, whether it's macro data or whether it's the market momentum. Do you also believe in this decoupling theory, or do you think it will catch up, perhaps with some lag, but sooner or later it will?
Maybe it could, but I think what's unique with India is that it was able to manage this pandemic with a different, let's say, COVID strategy than what you're seeing in China. And I think that made the difference for India in terms of supply chain bottlenecks and any kind of other disruptions, and why you're dealing with what it looks like decoupling. On the other hand, it's also maybe really specific Indian economies for that reason. I think in the end, all central banks are in the same boat, right? They all have to raise rates because they deal with an inflation rate that suddenly starts to surge everywhere, because it is a global reopening, it is a global pandemic still. But there are countries like India that can actually move away from that sort of tightening path. Same for Brazil, that has done a lot and can now pause, and there's some others. So I think they're not made the same, why you will see divergence. So India is an example, as a divergence example.
Okay, Ben, great to chat with you and get in your perspective on the rate hike announced by the US Fed next week. All eyes will be on the RBI as well. Thank you so much once again for taking time out and joining us this morning. Okay, let's look at the domestic markets then, and of course the impact of global cues. Let's understand what's happening from Chandan Taparia of Motilal Oswal. Morning, Chandan. Today is also the weekly expiry, and we have a lot to work with as far as global cues and US Fed's commentary is concerned. We're already looking at SGX Nifty pointing to a 150-point downtick. What do you expect for the rest of the day for Indian markets?
Good morning, Karnya. So the market got stuck in a range from last 14-15 trading session, where it finds support near to 17,442, and upside multiple barriers are near to 18,088. So from last 14 to 15 days, we have got stuck in this broader range, and the middle of the band is near to 17,777. So technically speaking, the market is just hovering 300 point plus and minus to 17,777. Whenever it comes to the lower band, it witnesses buying interest. Whenever it goes to the upper band, the absence of follow-up buying, take it again to lower zone. So we are opening down, and we believe that 17,550 could be respected during the day, and can bounce, could be seen to a 17,667, and hurdle will be there at 17,777. So for day point of view, and especially to play the expiry day point of view, we look at the broader range of 17,442 to 17,777. So today is the weekly expiry, and week-on-week basis, we are up by around 1%, and we are hovering near to the V-wave. But after the gap down opening, as the SGX Nifty indicates, will be trading lower than the V-wave. So because of that, upside will be kept, call writers will be having grip, and put call ratio will go down. So we'll play the broader range of 17,442 to 17,770 level for the Nifty index.
Okay. We typically take viewer questions later on in the show, but an interesting comment coming in on our feed asking if it's a good time to buy on dips. Is that a strategy that one should have right now, or should they wait for a little longer to expect a bigger downside over the near term? Do you foresee any larger downside happening?
Karunya, we are not expecting any bigger correction in the market, and you must have noticed in last many weeks that whenever we see the major decline, even in earlier instances, the market fallen to 17,150 or 350 or 161 or 442. Every time declines were being bought smartly. So because of that, I don't see major decline in the market. And those who are looking for positional point of view can utilize the recent volatility and the recent minor dip to grab the opportunity for the next leg of rally. Technically speaking, 17,150 is the positional support, 17,442 is the immediate support, and we believe that these levels are going to respect the market decline to see the next leg of rally towards 18,088 and then 18,200 if someone is looking for the Diwali onwards.
Okay, let's address some individual stocks as well, which could be in the limelight on back of news flow. First one is Ashoka Buildcon. They've won fresh orders worth close to 260 crore rupees from new BG line from Southwestern Railway, and this includes an EPC project of electricals as well as telecommunication works. How's Ashoka Buildcon looking on the chart?
So if you look at the Ashoka Buildcon or Ashoka, which is trading near to 84, 85 rupees, stock has witnessed some profit booking decline in last couple of days. Even if I look at the weekly chart, it is forming the pattern of lower top, lower bottom. So I don't see major uptick, but yes, decline could be both. Recently it moved to 95, but failed to surpass the key hurdle of 100 and drifted lower. So I think let it come near to 75 to 72. That could be the key level to again accumulate the counter for a bounce back rally in the counter.
Okay, all right. Next stock is PB Fintech. It's looking to invest close to 650 crore rupees in its subsidiary, which is Policy Bazaar, and along with the 650 CR, they're also looking to invest another 250 crores in their other subsidiary, Paisa Bazaar. So Policy Bazaar and Paisa Bazaar are likely to see some fund flows coming in from parent company PB Fintech for future expansion strategy. Talk to us about PB Fintech, because we see a lot of queries quite often coming in for this stock. Now, if I look at the July lows, it has seen a good bounce back from those levels. But net on a 3-month basis or a 2.5, 3-month basis, it has been rather flattish.
Yeah, exactly. You see, YTD basis, this stock is down by around 46, 47%. And if I look at the monthly chart, it is continuously making lower top, lower bottom. But the good part is some sort of consolidation is visible from last 3 months. If I look at the recent bottom that was near to 472 before the return from 454. So bounces are being witnessed from the lower levels, but upside is also being kept. So in recent past, we have seen a run up between 452 around 600 zone. Recently, just a couple of days back, it bounced to 575, but that bounce fizzled out. So the good part is that the declines are being bought, supports are working, but follow-up is totally missing. So I don't see the major momentum in immediate basis. But yes, if it declines near to 480 to 490 zone, then one can buy with support of 470, and then slow and steady it can head towards 550 to 575 levels.
Okay, all right. The next one and the last stock on our list is Dodla Dairy. TPG Dodla Dairy Holdings, which is the investor in the company, has offloaded 3% stake in Dodla Dairy. The buyer in this transaction is Bharat Biotech International, which has bought close to 3.4% stake or 20.3 lakh shares for 525 rupees a piece. The stock yesterday shut shop at 528, 529 levels. But Dodla Dairy also has given up close to 7-8% last 2-3 weeks. Is the downward trajectory going to sustain, or was it a temporary trend and the stock could see a bounce back from here on?
Actually, this stock is usually witnesses less trading volume, but on last trading session, some block was seen and the volume was more than 20 lakhs. Recently, it has seen the correction from around 580 to 518 kind of level. And now the way it is respecting to key moving average with a spurt in the volumes, which clearly indicates some accumulation at lower level. So I think one can accumulate with support of around 500, and stock has potential to bounce towards 550 to 565 on the upside.
Okay, all right. You know, the next stock I want to flag off, it's a comment coming in from our viewers. It's Sona BLW, and this is one stock which saw a stellar run up last year. It was one of the biggest, IPO successes as far as the primary markets go. Jiffin is sending us a message and he wants to know your view on this one, because this year, especially the last few months, have been rather tough for Sona BLW.
So when we talk about Sonacom or Sona BLW, this stock is not performing well in last couple of weeks. In fact, if I look at the monthly chart, it is in the process of forming lower top, lower bottom. And what we noticed that every bounce were being sold. Recently, just couple of days back, it headed to 548, but that bounce sold easily. The stock has failed to give the breakouts and turned lower. So as of now, I don't suggest to accumulate this stock. However, most of the auto stocks were doing well, but this is one of the underperformer name in the entire auto space, especially when we have seen run up in the Bharat Forge or Momentum, TVS Motor, Maruti. Sonacom is the only auto sector which is continuously underperforming and even making lower top, lower bottom in the absence of buying interest. So I think let's just wait for it. It is making lower top, lower bottom formations. On downside, let it correct towards 485, 460 zone. That may be the right time or right level to accumulate. While on the upside, now you may find hurdle near to 525 months.
Okay. The next stock also is an auto ancillary company, RK Forgings, which also saw a bit of a decline, a significant decline rather, in yesterday's session. How is RK Forgings looking? Kishore wants to know, it was down 6% yesterday, and whether you would recommend a hold or accumulate at the current levels. From June lows, RK Forging clearly has seen a very strong run up, from those 140, 145 levels. But what we're witnessing right now, is it profit taking or could it mean something more?
See, if someone is asking about auto, I'll try to be with the outperformer name, whether you talk about TVS Motor, M&M, Bharat Forge, Maruti, Eicher Motor. I'll avoid the stock which are not performing. And what I believe in, market is recovering and a stock is not ready to move up, that clearly indicates that participants are not having keen interest on the same. So recently when you've seen the uptick, the stock fell to surpass 212, 214 level, and yesterday it was down by around 6%. So I don't see any interesting price picture here. On downside, it has potential to go down to us 180, 175 levels to test.
All right. Okay. So you prefer OEMs at this juncture specifically more than auto ancillary companies, especially the one which are still not performing well despite the rally seen in auto stocks. Okay, let's change gears from auto to IT. Kalki is writing to us and wants to know if it's the right time to buy IT stocks. What is your view?
So like in IT stocks, we have seen correction, and the concern is your Nifty IT is not performing because of the weakness in the global market. You have seen that S&P is falling down, your Nasdaq is also falling down, witnessed some recovery, but that was being sold. So whenever we see the bounce and that being sold, that clearly indicates that supply is visible. When you especially talk about Infosys, this stock is down by around 27% in this year. When you talk about TCS, it's down by around 20%. So the concern is let them first get stability, then we can talk about any kind of recovery. But yes, if you just conclude or ask any IT name, then I'll focus on KPIT Tech. KPIT Tech is moving in a rising channel, recently taken support at its 50 exponential moving average. The stock is holding near to 600. Any decline could be bought with support of 575 for an upside move towards 625, 640 level. Apart from that, if someone has to look at the IT name, I'll focus on now bottoming out approach in APS Mind and Tata Elxsi. So these three counter are comparatively more stronger if you talk as entire IT space.
Okay. And, we're getting a lot of sector-specific questions, actually. The next one I want you to address, I'm just clubbing a few questions here from our viewers on the live feed. What is the view on metal sector? And given the recent recovery, does it merit now to perhaps enter for those who couldn't buy it last time when the sector was on? Deepak, he's been writing to us to know your view on Patanjali Foods. Again, one of the traders' favorite stocks. Very solid momentum seen there of late. Can it continue?
So Deepak must have seen my picture with Baba Ramdev in the recent event.
I don't know about Deepak, but we all did.
Okay. So see the companies, I even personally made to Ramdevji, and he was giving the perspective about the vision of the company and also talking about Patanjali Ayurveda and all. So, and he's looking for among 5 top players in this segment. So the comment visions were quite bullish, and because of that, stock is continuously moving upwards. Even after the market volatility, it is heading towards the new lifetime high. In 2020, the lifetime high was 1519. I'm looking at the chart after the merger of the Ruchi Soya. So all set, the stock is all set to surpass the previous high of 1520 and expecting the rally to our 1650 to 1700 zone. So price setup is quite positive, and the stock is also in momentum because company is planning some more IPO and the business growth is also there in the stock.
Okay. Since we're talking consumption stocks, there's quickly one more question I want you to address, and this is from Sartaj. He wants your advice on HUL. So while you've shared your pick or your view on Patanjali, what is the sense on a behemoth like HUL?
Exactly. So we are quite positive on the FMCG name, and we believe that even if market consolidate or react to the global factor, your FMCG stocks are likely to do well, whether you talk about HUL, ITC, Medico, Britannia. So HUL, however, has been consolidating from last couple of days. But the good part is the meaningful declines are being bought. If I look at the price structure from last 45 days, it has been consolidating in between 2,500 to 2,700 level. And recently it has taken the support at lower band of the trading range near to 2,500. So here we have rising support near to over 2,550 and has potential to rally to us 2,720 and 2,800 on the positional point of view.
Okay. How about your own preferred picks in the market right now, Chandan? Which stocks are on your radar?
So already you talked about so many stocks and you came to know about my liking and disliking, especially I'll avoid IT, metal, some mid-cap non-performer counter, but I'll continue to be with FMCG name. So HUL we like, and already mentioned that we are expecting the momentum to us 2,750, 2,800 level. I can look at the trend also. Trend has been doing well. This stock is continuously moving upwards from last 8 years. And now in last couple of days, it has been consolidating with higher market base. So 1375 is the major support, and this rally can extend to a 1700 level. So we talked about HUL, we talked about Trend. Titan is other name where one should keep focus. And I'll be positive on the cement name. However, we have seen some decline in last two trading session, but already most of the cement stock have run up well. So let them correct to us 500, 520 level. We'll accumulate Ambuja cement for next leg of rally. And the scenario is stock can move to us 600 to 650 level. So FMCG and then selective cement counter after the recent decline could be the preferred pick in this market space.
Well, looks like you are definitely betting on the consumption story as far as Indian markets are concerned, whether it's auto, retail, FMCG, or even cement. Thank you so much, Chandan. It's always great to have you on board and get in your review and your advice on a host of stocks as well as the markets at large. With that, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.